Deals go sideways for a lot of different reasons, but there's a lot of solutions as well to helping get past those problems. You need to manage your mindset first and foremost. Get off the panic button when a deal goes sideways and let's get into action. If the buyer still wants to buy and the seller still wants to sell, then you still have a deal. We just have to get to work and solve the problem. So why do deals fall apart? Usually because of down payment issues or credit issues. So if a buyer has a down payment issue or a closing cost issue, maybe the rates went up and they're trying to buy the rate down and they're going to have to pay more out of pocket than what they had initially anticipated. There's a few things that buyer can do. Number one, they could sell an asset. If they have an extra car, a motorcycle, fishing boat, any kind of tangible asset like that, they could sell that to get the extra cash that they're going to need. You need to talk to your lender if that's the situation you're in, because the lender is going to have very specific requirements that they need to see the paper trail of the ownership and sale of that asset. So don't just go off and sell something and then come in with this cash to close. Your lender is going to need to be involved in that process. If you have a 401k, most 401ks will allow you to withdraw up to $10,000 without penalty if it's going towards the purchase of your first home. So again, check with your bank, check with your financial advisor, and see if maybe that's an option for you to help come up with the additional cost. Do you need to get a cosigner to help you out? A lot of times you can get a parent or a sibling to co-sign on the note for you. Their credit score and their income can help push it to where you can get that approval. So don't be discouraged initially if you don't have enough money. There are options to help out with those types of things. Maybe it's a ratio issue. So when a lender is looking at your income and they're looking at your debts, typically they want your housing ratio, the amount of money that you make each month that's going towards your housing payment, to be 28% or less. They want your total debt to income, meaning the total amount of debt you pay versus the total amount of money you make, to be 36% or less. So sometimes you may be a little off on that. So do you have a car that maybe you only owe 10 or 11 more months of payments? Could you get that car paid off? Could you have a family member pay that off for you so that that debt comes off of your credit report? Another thing you could do would be to pay down or pay off a credit card or a student loan. Something you have that maybe you've got a little bit extra money that you could just go ahead and pay it off, so they're no longer having to count that into your debt to income ratio. Again, you want to talk to your lender. They can advise you the best way to go about that and what kind of paper trail that they're going to need from you to prove that that loan has been paid off. Sometimes you can switch to a different loan product, and that will help. Conventional loans, typically, if you have a higher credit score, then the debt to income ratio isn't going to be as big a deal. But if you have a lower credit score and you're trying to go conventional, then they're going to be more focused on your overall debt to income ratio. So maybe you need to switch to an FHA loan where that 620 credit score isn't going to be as hurtful to you as it would be on a conventional loan. Again, you may need to get a cosigner to help out if your debt to income is way out of whack. The third thing is credit score issues. Has your credit score changed since you initially started the home buying process? Sometimes we have buyers who are just like right on the cusp. So they go to the mortgage lender and their credit score is like a 585 and they need a 600 in order to qualify for anything. Most mortgage lenders these days have a program that they can run your scenario through, and it will give you 2 or 3 options of things you can do to raise your credit score fairly quickly, okay? So a lot of times people make a huge mistake and they'll have a medical collection on their credit report, and their first thought is, well, I'm going to pay off that collection, and so that'll raise my credit score. That's not always the case, because if it's been, 3 or 4 years since that collection got reported, and then you go and pay it off, then that updates the credit. And just because you paid it off doesn't necessarily mean it's going to raise your credit score. So you always want to have your lender involved in these types of things to give you advice and to give you guidance. But a lot of times you can fix certain items on your credit report. Go over them with your lender if something's incorrect, if they're still showing a debt that's been paid off. Credit report, for whatever reason, is still showing it open. Maybe they're showing that you missed a payment. Maybe there's an account that you have that is not reporting, and you can get your credit report updated with that account. All those things can help you to get your credit score up so that you qualify and maybe even get a better rate than you would at your current credit score. Another thing that causes a deal to fall out of contract is when there's a home sale contingency. So I ran into this case last week, actually, and I had a listing and we were under contract with a buyer who had a home sale contingency. And we went all the way through. He'd already done his home inspection. We had negotiated repairs, and my seller had actually made about $3,500 worth of repair. The buyer of my seller's house backed out. Like either their financing situation had changed or whatever. So now the buyer who was selling his house can no longer buy my listing. So if it's somebody who really, really wants to stay in the deal with the contract, you can always stay under contract with them and give them what we call a first right of refusal, which just means you're still open to sell the home to another buyer who doesn't have that contingency if they make an acceptable offer. The original buyer would have 24 hours to remove that contingency. Now, if you've got a backup offer in place, you can just move on past and move to that backup buyer. But just because things happen in a deal, a lot of times people are they get frustrated, they get caught up in the emotion of the moment, and the deal dies because nobody took a level-headed approach of saying, okay, this is where we're at, this is where we want to be, and what's the best way to get there, given the current set of circumstances. You need an agent who can be level-headed for you, because a lot of times sellers do get very emotional, buyers get very emotional, and it just seems like there's friction there. So you need somebody who can be the in-between to be that calm voice and say, okay, we have a problem. What's the best way to get this to the closing table? My name's Amy Schrader. I'm with RE/MAX Real Estate 10. If you need an agent to help you negotiate the process, send me a DM.